Time for some more lessons from the trading great legend Bruce Kovner. And remember, Bruce Kovner is the guy who went from taxi driver to hedge fund manager making millions. And I say millions, but what I mean is billions, because this guy is worth over 5 billion. And this is the second video we're doing on Bruce. If you didn't see the first one, I will link to that playlist right here. You'll see Bruce's video, you'll see all our videos on the market wizards and trading legends that we do, because we're always trying to pull the best lessons we can from these guys. So first we got Bruce Kovner on a trader's mindset, so on Michael Marcus. So in this section he's talking about Michael Marcus, which we also did a video on. Remember, he's Aubrey Marcus's dad, and Aubrey Marcus is the guy in the open relationship, which I'm sure he would hate being called that guy. But anyway, Michael Marcus also taught me one other thing that is absolutely critical. You have to be willing to make mistakes regularly. There is nothing wrong with it. Michael taught me about making your best judgment, being wrong, making your next best judgment, being wrong again, making your third best judgment, and then doubling your money. Mistakes, they are gonna happen, especially in the market. And I say this all the time. Some of the best traders have win percentage rates that are very low, like 40%. So more than half the time they are losing, but they structure their trades in a way that when they win, they make a ton of money, and when they lose, they only lose a little bit. So you can lose a bunch of times in a row, and then when you finally win, you make up for all those losses plus a bunch more, which this is a great example right here. Being wrong on the first time, the second time, and then finally on the third time is where you hit it. If you can't take those losses and you can't take those mistakes, well then you're never gonna get to that third try, are you? So you gotta get comfortable taking L's. It's a part of the game. No one's winning 100% of the time. The emotional burden of trading is substantial. On any given day, I could lose millions of dollars. If you personalize these losses, you can't trade. This is just a continuation of the last thing he was talking about. You can't take every trade close to heart, because if you do, well, you won't be able to take the losses. You'll never be able to get to that third try when you hit it big. Really, you need a healthy amount of detachment from your trading account in the market. You can't be thinking when you like lose $25,000 on a trade, when you start getting up there, you can't be thinking, oh damn, that was a new car, or man, that was part of my down payment for a new house. You gotta treat those numbers on the board like just numbers on the board. It's all a game. It's a serious game, but you need that level of detachment. And that's also why you don't trade with money that you can't afford to lose, because if you can afford to lose it, then you could be objective about it, and that's important. Successful traders are strong, independent, and contrary in the extreme. They're able to take positions others are unwilling to take. They are disciplined enough to take the right size positions. A greedy trader always blows out. So the first thing is independent thinking, and in my case, I look at that as executing my strategy no matter what. So there's going to be times where everyone is selling, and you're sitting there like, oh damn, I should probably be selling too, but the strategy I put in place beforehand is telling me to buy. So what are you going to do? Are you going to break your strategy, or are you going to stick to it and be that contrarian when it feels like everyone else is selling? It's those times that kind of make and break your P&L. So right now, as of this recording, we're going through a drawdown in the market, and the system I use, the NASDAQ All-Stars, a momentum system that I talk about all the time, which if you want to learn more about, I'll link to that video right here. Well, you know, I'm feeling a little antsy because I'm in high momentum stocks, and a lot of times they get crushed the hardest when the market turns. So I know a lot of the people that I talk to are de-risking right now, but I'm not, because I'm sticking to my strategy. One of my positions hit a risk point recently, so I took that off, but the rest of the positions haven't. They're actually holding up sort of strong. But regardless if they were holding up strong or not, my strategy doesn't say to take money off the table based off how I think the market is doing in this short to intermediate term. I'm sticking to my strategy, sticking to my stops. Second part of this, they are disciplined enough to take the right size positions. A greedy trader always blows out. Now this you normally see when the market is doing well. When your positions are doing well, you want to pile more money in because you might feel like you're on a hot streak or whatever it is you think you should size up. Well, if your strategy doesn't say to size up, then don't do it, because when the market turns, as it is right now, even if it's during the short term, if you got too much size on, you're going to feel it. You're going to feel in over your head. You're going to feel like you're drowning, and you're going to screw up your strategy even more, looking at those numbers turn red like that and all that money going. And the worst part is that even if you stuck to your strategy and stuck to where the stops are and all that, if your position sizes are too big for what your strategy allowed, you can blow out, especially when something unexpected happens in the market. So always remember to size properly. Here's Michael Marcus on price action. For me, technical analysis is like a thermometer. Fundamentalists who say they aren't going to pay any attention to the charts is like a doctor who says he's not going to take a patient's temperature. But of course, if a doctor didn't do that, that would be sheer folly, which is why if you're a responsible participant in the market, you always want to know where the market is, whether it's hot and excitable or cold and stagnant. You want to know everything you can about the market to give you an edge. Not using price action and technicals is like a doctor not using a thermometer. It doesn't make any sense. And I agree with this, because I see value guys who get into positions and just wait there for so long with dead money. Where if you used a little bit of technical analysis, you could just time it a little better. You can see when the rest of the market is picking up on what you saw. Now, technical analysis isn't the end all be all like a lot of people treat it, but it's a great addition to a full strategy. And it's something that even fundamentalists should be using, because why wouldn't you? It gives you really good information. The principal characteristic of a bear market is very sharp down movements followed by quick retracements. In a bear market, you have to use sharp counter trend rallies to enter positions. And he's talking about shorting here, I'm pretty sure. Bear markets are way more volatile than bull markets. And a lot of newer traders, they think, yeah, you know, I could do long and short with equities. That's so easy. But in fact, long equities, like buying stocks, is so much easier than trying to go short stocks. And it's just because of how bear markets move. Like in a bull market, when you buy a stock, the chart and the index, they can go nicely up in a straight line. When you're trying to short in a bear market, it's never gonna go nicely down in a straight line. It's gonna go down, spike up, go sideways for a bit, go down, spike down again, spike up again, and you basically get tossed around. It's just much harder, which is why like only true professionals who are able to handle that and know how it works should be shorting the market. They're two very different things, even though they seem like two sides of the same coin. Okay, as I said, if you want more lessons from trading greats like Bruce Kovner, make sure you check out that playlist that I'm putting right here. We got Michael Marcus, we got Kovner, we got Stan Druckenmiller, Ray Dalio, lots of lessons from really smart guys. And if you want more of these types of videos, because I'm going to make more of them, make sure you subscribe to this channel and hit that notification bell for an email notification when they come out. We're publishing videos every single day, all about markets, finance, business. It's great. So subscribe and I will see you in the next video. Stay fallible out there. Bye.